Hello again, everybody. Welcome to another installment of Between Two Earnings Calls with Mr. Investor Relations. I'm your host, 𝗕𝗏𝘃𝗲𝗀𝗏, and in this video, we're going to walk through our September 2025 job market update. So let's start with our dashboard. It was a pretty solid month overall. Typically what we expect in a month is 10 to 14 jobs. Now it's about 1 to 2 calls and a conversion rate between 10 and 19%. And in terms of actual numbers, we hit 18, which is above the range in terms of opportunities. We had 3 calls, which was above the range or right around the range, top of the range. And then our conversion rate was within the range at 17%. So we had a nice rebound in September, especially when you think where we were in July and August, where the market was not very good in terms of follow through. So let's look at the historic tracker. We were at 16.7% in September. It was a really strong month for conversion. But for the second half, we're only tracking to about 6%, 6.3% because of those 2 weak months in July and August. And you look at this, we're about 2 standard deviations below the mean. And one plus or minus 1 standard deviation is about 4.5%, which gives us that 10 to 19% range. Now, when you look at this on a monthly basis, you can see we saw a nice spike in September. What we're seeing is about 44% of the months had no follow through now in 2025. We think the rate cuts of 25 basis points were really helpful to the market. And this is a significant improvement from July and August. Now, when you look at the total IR market, we're seeing a lot of strength here in that the number of jobs were up 125% year over year. It was down about 7% on a 2-year stack basis. The market seems to be rebounding from tariff uncertainties. We think the rate cut may have helped the market a bit here in September. And really, the lower level job market is just extremely resilient in IR. Again, we look at this on a monthly basis, we're seeing some strength here in the back half of the year. We had 32 in July, 22 in August, and 27 in September. That makes for a pretty solid third quarter relative to the rest of the 3-year period that we've been operating in. And again, the lower level IR market is working very well. So now let's look at the number 1 IR job market. And again, we saw 125% year over year increase. We think what we're seeing is we're benefiting from not having the uncertainty of a presidential election that we had a year ago. And we were down about 5% on the 2-year stacked comp. And again, this is significant improvement from July and August. Now, when you look at this on a monthly basis, again, we're near the peak. We had 18 opportunities in September, which is a nice acceleration from August and really a nice acceleration off those lows in May. The question is, what does October look like? This is going to be the seasonally weak period of hiring. So we're not expecting strong October, November, December, partly because of the holidays. Now let's get into conversion. When you look at conversion, we had about 3 opportunities in September, which again is an improvement from July and August. And the problem here is that we're not necessarily seeing follow through relative to what we've seen historically. That's where the big problem in the market is, that the macro uncertainty is hindering some of that follow through. As you see it here on the conversion rates, it's still choppy. And again, the chop is because it seems like some companies are hesitant to actually make the hire. They want to see people, they want to post jobs, but we're not necessarily sure people are in the market to hire people all the time. So let's look at Jobalytics and days to rejection. We've stopped using Jobalytics. And why? Because we think that it's tracking meaningless keywords. When we used Google Gemini to look at our resume, it returned us very meaningful keywords relative to a job description or job descriptions that we looked at. When we're using the Jobalytics tool, we're getting very generic keywords that don't necessarily make sense to sell yourself to a hiring manager. So we've rejected this tool for now. Days to reject have improved. It was 8 in August. It's now 23. So we like that lengthening of the rejection cycle. And even Workday rejection cycle has lengthened. It was 10 in August, and now it's 18. So in terms of companies, a lot of big names in the market: Grok, pre-IPO company; Formlabs, pre-IPO company. You had Facebook, PagerDuty, Instacart, Visa. Lots of big names here looking. So we think there's opportunity for people who are in the market and may want to grow their career. So again, historically speaking, 6.3% for the second half in terms of conversion is really rough. We'd like to be in that sweet spot of low to mid teens to see a really well-functioning market or above. And then lastly, we've now tracked 606 jobs since January of 2023 in investor relations, and that represents 27% of the New York Stock Exchange and 18% of the NASDAQ listed companies that are out there. So we'd love to connect with you. If you have questions, please reach out, and thank you for watching.